Redefine has posted a 2.9% dip in its full-year dividend and distributable income per share. That's as the owner of Centurion Mall faced high interest rates and low economic growth during the period. But the firm says it is now focused on a potential recovery. It's eyeing an upward property cycle in 2025. Redefine believes this will be gradual as the lingering effects of elevated interest rates are worked off, and spiraling tensions in the Middle East could disrupt the inflation glide path. Taking this into account, the group has forecast distributable income of 50 to 53 cents per share for the 2025 financial year. ENX has suffered a profit hit. The industrial group has posted an 11% decline in headline earnings per share from continuing operations for the full year. The firm says it faced challenging economic conditions during the period, but despite this, both its lubricants and chemical segments performed well. Its power segment, however, was hard hit due to no load shedding in the second half of its financial year. Altron has shot the lights out. The technology firm has increased profit by more than 100% at the halfway stage. This was driven by a strong performance by the group's platforms segment. An interim dividend of 40 cents per share has been declared. That's an increase of 60%. Looking ahead, the group says it remains on track to achieve its medium-term targets for operating margins in the platforms and IT services segments. Exemplar has delivered a 6.4% rise in net asset value per share during the property group's half year. The Real Estate Investment Trust says this is largely due to fair value adjustments on investment properties. The firm is the only South African fund that focuses exclusively on rural and township retail. An interim dividend of 70 cents has been declared. This reflects an increase of 9.3% on the previous period's payout. Collins Property Group has declared an interim dividend of 50 cents per share. That's a 25% jump on the previous payout that the Christo Visa-backed business made. Formerly known as Tradehold, the company was converted to a real estate investment trust last December. Going forward, Collins says it's keen on growing its presence in Europe. Anglo American has inked a deal to sell its minority stake in Jellinbah. The asset is a joint venture that owns interest in steel-making coal mines in Australia. Zashvin, who is an existing shareholder in Jellinbah, will pick up the holding for $1.1 billion. The deal marks the beginning of Anglo's wider plan to restructure its business by selling and divesting unwanted assets. This includes exiting coking coal mines in Australia and nickel assets in Brazil, while spinning off platinum mines in South Africa. Anglo is also weighing whether to sell or separately list its De Beers Diamonds unit. The firm plans to focus on its copper, iron ore and fertilizer business going forward. Meanwhile, AECI plans to sell its subsidiary Mughal Asphalt. A consortium which includes Old Mutual Private Equity will buy the firm, and AECI will receive around 1.1 billion rand from the transaction. The firm says the deal allows it to streamline its portfolio and focus on its core operations. The sale still needs the approval from competition authorities, and other suspensive conditions also need to be met. This all needs to be done by no later than the end of June next year. The PIC could fund SA's public health infrastructure upgrade. The Department of Health and the Treasury are discussing the possibility of tapping into the country's 2.3 trillion rand savings pool. These talks come as the Health Department prepares for the implementation of the NHI. The pension fund industry comprises more than 4 trillion rand in retirement savings, and more than half of that is in the custody of the PIC. Any move for the PIC to fund public health infrastructure is likely to require amendments to Regulation 28 of the Pension Funds Act. In company news, further afield, Boeing delays are weighing on Ryanair. As a result, the airline has had to taper down its passenger growth expectations for 2025, but expects to experience a boost from lower fares. Here's more detail in this package report.
Europe's largest low-cost airline, Ryanair, trimmed its passenger growth target for next year. That was due to Boeing delivery delays. The plane maker was meant to deliver 15 737 MAX aircrafts next year. But Ryanair assumed that number was high risk due to Boeing's ongoing strikes. Ryanair cut its passenger target for the year to March 2026 to 210 million passengers from 215 million. However, it said lower airfares throughout a poor summer were now increasing. The Irish airline reported $1.95 billion in after-tax profit for the 6 months to the end of September. It marked an 18% fall from last year as average fares fell 10%. But the group's CEO, Michael O'Leary, said fares in the current third quarter are set to be only, quote, modestly lower than the same period last year. Ryanair's CFO said ticket price weakness has been partly due to the impact of high interest rates on consumers, and also the decision by a number of online travel agents to stop selling Ryanair flights in early December following legal and regulatory pressure. But the CFO said the issue with travel agents was, quote, pretty much behind them, due to new agreements with a majority of them. Shares in Ryanair were down in early trading.
In the meantime, China has asked France for assistance in its EV tariff battle. The East Asian nation wants France to push the European Commission towards an acceptable solution for electric vehicle industries in both regions. Let's take a look.
China has urged France to push the European Commission towards a palatable electric vehicle trade solution. But France said the bloc won't yield on key matters as it pushes to overturn China's import duties on EU brandy, which it brands political and unjustified. The EU launched an anti-subsidy investigation into imports of Chinese-made battery EVs last year. In October, it voted for tariffs on those vehicles. China in recent months has launched its own investigations into European pork and dairy, and from October it imposed temporary anti-dumping measures on imports of brandy from the EU. On Sunday, Chinese Commerce Minister Wang Wentao urged Paris to take on an active role to nudge the EU on Chinese EVs. He told Trade Minister Sophie Primas that the bloc's investigation was a major concern that has seriously hindered China-EU auto industry cooperation. Primas told Wang that the EU doesn't want to escalate the situation and will continue to trade with China. Wang also said Beijing's trade remedy investigations on EU brandy, pork and dairy products were in accordance with the domestic industry's applications, and the government had complied with World Trade Organization rules, quote, unlike the EU, which was rash in launching its EV probe. But Wang said China is willing to work with the European Commission towards a proper solution.